Um, I want to ask you about throughout the war with the uncertainty. Something that you mentioned, a lot of people expected, including myself, is for gold and silver to do better, considering that level of uncertainty that we had. And I'm talking in the midst of the war and after the war, when we kept seeing a ceasefire, but with ongoing clashes between the two. Trump threatening renewed attacks, threatening to take Karg Island. What do you make of the performance of gold and silver in the last few months?
Yeah, well, I guess if you're long, the last couple of months have been disappointing if you were expecting some big gains out of the war. But I think that had the war started and gold was still around $3,000 an ounce, it would have been a very different story. If silver were still $30 or $40 an ounce, it would have been a very different story. But the war happened to start right after gold and silver really went on a record-breaking run. Gold had gone from 3,000 to 5,500 in about a year. And silver went from 30 to 120 in about the same time period. So these were huge runs. Look at a chart. I mean, unprecedented, overbought, parabolic moves. They were prone to some type of pullback. And as it turned out, the war was the catalyst for that pullback. And some of that was because I think that towards the end of the move up, the markets were already building in the expectations of a war. This war didn't just come out of left field. It was pretty obvious for about a month before the war started that something was going to happen in the Middle East. And so I think that started to get priced into gold and silver as part of that run up. And when the war started, as is typically the case, you get a buy the rumor, sell the fact. And that's what happened. And we had a healthy correction in both gold and silver. And I think once this correction ends, the bull market's going to resume. And I think the war itself just added to the bullish case for gold, because we ended up spending a lot more money because of the war, running up bigger debts, which it means more inflation. Ultimately, that's bullish for gold. And I do think that the conflict ultimately may resurrect itself. And the next time that happens, that may be bullish for gold, because we'll be over with the correction and we'll be in another stage of the bull market.
You're worried that we could go back to war?
Yeah, back to the same war. Maybe not before the midterms. I don't know. I mean, I think the closer we get to the midterm elections, the less likely it is. But once we're through that, Trump doesn't have to worry about any more elections.
But why would he get back into the war?
I don't know. Why do we get into it in the first place? But I do think that Donald Trump wants a Republican president to follow him. Because if a Democrat president follows him, he could end up, with criminal charges or something, right? So he obviously wants a friendly administration. So I guess there are some stakes for him, because he's still very popular in the Republican Party. So it would be very difficult for a Republican administration to have the Justice Department go after him. But among Democrats, if you're a Democrat, you're going to win favor with your base by going after Trump. So, and I wish that this wasn't the case. I don't like the weaponization of the U.S. government against anybody for political reasons, So I don't like what's happened. And I've been victim of that myself. The U.S. government has gone after me and used its power to punish me or go after me, not because I did anything wrong, but because they don't like what I'm saying politically. And so this is, this happened to Trump, and it's happening to other people now.
Well, kind of linking to gold and silver, what do you make of the meeting, the Fed meeting, and Kevin Walsh? He does seem more hawkish than a lot of people expected, than Trump would have liked.
Yeah, well, ironically, he seems less dovish than Powell was. And the reason that Trump didn't want Powell was because he wasn't dovish enough. And now they got a guy who's less dovish. I don't even
It's
like
like
to
it's
use
like Iran.
the word
Peter, it's like Iran. He didn't like Ali Khamenei, so he got Mustafa Khamenei, his son, who's even more radical than his father. It's not going well for Trump.
yes. So but he's not. He's more of a chicken hawk. I mean, if he was really hawkish, they would have raised rates yesterday. In fact, somebody asked him the question, "Why aren't you just raising rates today?" And he refused to answer it. But also, I thought creating these 5 task force was an easy way of doing nothing. Say, oh, we're going to have these 5 task force to study the problem. I mean, don't you know what the problems are by now? And don't you have some idea what the solutions are? What do you need a task force for? And meanwhile, the Federal Reserve already employs an army of people, not just the FOMC, but they have so many accountants and economists and guys like, I mean, why do they need more? Why do they need to bring more people in? And, one of the things he said he wanted to try to figure out was the drivers of inflation. Well, I mean, it's the Fed is the driver of inflation. You don't have to figure that out. The Fed creates it. And he actually admitted that inflation is a choice, which it is. The Fed chooses to create inflation. It doesn't have to choose inflation, but the alternative is something that it doesn't want to choose. Because if you choose no inflation, then you're going to have a bear market in stocks, a bear market in real estate, a bear market in bonds, a recession, a collapse in real estate prices. You're going to force the U.S. government to cut spending. And I would like to see the Fed make that choice, but there's no way they're going to do it. That's why I believe when push comes to shove, Warsh is going to make the same choice as Yellen and Bernanke and Powell, and he's going to choose inflation too. And the government always chooses inflation. Trump chooses inflation. That's what makes the big, beautiful bill. The only reason that he could cut taxes on overtime and tips and Social Security is because the Fed was going to create inflation to make up the difference, because he didn't cut other government spending. So the only way to finance it is through inflation. So everybody chooses inflation because it's the most expedient way to achieve their goals.
What do you make of the stock market as well? Do you think we'll continue seeing it break records? And are you worried about how centralized it is with the tech sector? Is that sustainable?
Well, I'm not so much worried about the U.S. stock market because I don't have a lot of exposure to it myself. But I do think that a lot of Americans could end up losing a lot of money when the stock market goes down. The valuation is at an all-time record high, especially if you look at the concentration in a small number of names that are even more overvalued than the overall market. You have this huge bubble in AI and tech. Then you also have another bubble that's already deflating now in crypto, not Bitcoin and all the other tokens. And in fact, what's happening right now in real time is the whole house of cards that was erected by Michael Saylor is collapsing as we speak. Strategy stock is crashing. Stretch is crashing. Saylor sold Stretch to investors as a safe investment without volatility. It just traded 83. It was at 100 a couple of weeks ago. That's a 17% decline. He promised there's no volatility. The thing is collapsing. And strategy now is in a moment of desperation where the only way it can maintain the dividends on its preferreds is to sell common stock into the market. But the common stock is trading at better than a 20, maybe a 25% discount to the Bitcoin that it owns. And so every time strategy sells stock to buy Bitcoin or to raise cash, it's diluting shareholder value. It's destroying value. It's creating a negative yield, which is creating a death spiral for the company. Because if you own the stock, you have to get rid of it because he's just going to keep destroying the value to pay the preferreds and to buy Bitcoin. Because if he stops buying Bitcoin, it's going to crash. He can't sell Bitcoin. The only asset he has that makes sense to sell is Bitcoin. But he tried to sell 32 Bitcoin, and all hell broke loose. So that trial balloon blew up like the Hindenburg. So he can't do that again. So I think this whole thing is imploding right now. And without strategy, without Saylor, there is no real market for Bitcoin at 60,000. We'll see. Maybe there'll be a market at 20,000 or 10,000. I don't know, but the price has to go a lot lower.
Yeah, I'm just looking at MicroStrategy Class I share at $109 the share price now. Remember the days where it was over $400. It's the lowest it's been since 2024. Yeah, it's not looking good.
And it's going a lot lower, because why would you want to own it? Knowing that they're going to keep on diluting your Bitcoin per share. The original argument for owning Bitcoin, for owning Strategy, was that Strategy was using its balance sheet in a way to increase the Bitcoin per share. So if I owned the stock of Strategy, my ownership of Bitcoin would increase. I would own more Bitcoin over time. But based on the last 2 weeks and where we are now, the longer you hold Strategy, the less Bitcoin you're going to have. Yeah. He's going to keep diluting it. So why not get rid of it and just buy Bitcoin, where you can buy a Bitcoin and keep a Bitcoin. If you buy a Bitcoin through Strategy, at the end of the year, you may be left with half a Bitcoin. So what's the point? What value does it create? All it does is steal money from the common stockholders and give it to the preferred shareholders. That's where the money comes from to pay the yield. And by the way, the 11.5% yield, if he actually wants to get the stock up to par, he's got to start paying like a 13, 14% yield, which makes it even harder to service it.
Another thing I want to ask you about is the treasury yields that we're seeing right now, and comparing that to the debt that the US is in, the national debt. I know it's a very complex question, but I'd love to get your thoughts on it, kind of explaining it to us. People that are not too deep into economy, into economics, would look at this and just we look at it. It just seems unsustainable for everyone that sees it. But then we see the treasury yields; they're high, not great, but they not as high as one would expect, seeing how unsustainable that strategy is of constantly printing money and getting into deeper and deeper debt as a country. What's your position on not only just treasury yields, but the U.S. economy as a whole?
Well, I think the economy is also a house of cards, and I think the Treasury basically operates a giant Ponzi. But I agree with you that 5% on a 30-year and 4.5% on a 10-year does not make sense given a $40 trillion national debt.
Yeah,
that is skyrocketing. If you look at the numbers that we got from May, the most recent numbers from the U.S. government, I think it was about a 34% increase in the debt, in the May debt year over year. So this is massive. The interest expense rose by 44%.
That's insane.
Based on May's interest payments, interest is now running at 1.6 trillion per year. Now, some of that interest is paid to the Fed and to Social Security trust funds, but even if you X all that out, it's still like a net interest of almost 1.3 trillion. But it's going to keep getting bigger and bigger every single month, because more and more short-term debt matures and has to get rolled over. And the current yield's in the low fours. And ultimately, if we refinanced the whole debt, right, we have 40 trillion in debt. I think it'll be 50 trillion by the end of Trump's term. And if we had to finance that at 4%, that's 2 trillion a year in interest payments. That's 40% of tax revenues. But I don't think interest rates are going to stay at 4%. I mean, what if they go to 8%, which is still, not that high?
What happens then, Peter? What happens then if we get to those levels?
Well, I think we implode. But that's why I think the government will do everything that it can. I think the Fed will do everything it can to prevent that from happening. but they're not going to try to prevent it from happening by slashing government spending or raising taxes or doing something to shore up our finances. They're just going to create inflation. That's why I said that Walsh will choose inflation, just like his predecessors. Because if he doesn't choose inflation, he's choosing something politically that will be a lot worse, which is default, collapse, financial crisis. That's why Hank Paulson, who was the Secretary of the Treasury under Bush, a month or two ago came out and said that we need to have a break the glass emergency plan to deal with a debt crisis. And he did not say, hey, let's come up with a plan now to avert that crisis. We're headed towards a crisis, so let's do something so we don't have the crisis. Let's try to take action now to reassure our creditors in a way that we don't have to have a crisis. He didn't even bother to say that because he knows that that's never going to happen. So what he is saying is the crisis is inevitable. Let's just have a plan to deal with it.
What's the plan?
But I think the crisis is so bad, it doesn't matter what their plan is. If the crisis hits, we're SOL.
There's nothing we could do, the US could do if it does hit or when it does hit?
Well, there's things that we could do, but it's not going to, be a good solution where everybody is happy. Yes. We're once there's a crisis, there are things that we're going to do, but they will be a lot worse than the things that we could have done to prevent the crisis. But those things were already so bad that they don't even want to do it. Yeah. So they want to wait until there is a crisis and then, try to do something about it. But there's no like easy fix that just makes the problem go away. Like, oh, okay, we have something up our sleeves that we could do. No, that's it. That's the day of reckoning.
It's like we keep waiting for the day when we stop getting distracted by all these wars and tariff wars and this and that, and just focus on that one big issue that the US is facing when it comes to the debt. And that day never comes. And I think we're going to keep waiting and waiting until the problem comes and smacks us in the face.
Yeah. And it's going to be, the crisis is going to be driven by our creditors. It's not, we're not going to get out in front of this. We're going to wait for it to happen. And it's going to be the lenders deciding that they don't want to lend us any more money. And we know that's coming. Look, the big buyers of gold were foreign central banks. Those are the big buyers of treasuries. So they've already told us that they don't want all these treasuries, that they'd rather have gold. And that's going to continue. And I don't know what's holding up the bond market right now. But at some point it's going to cave. It's only a question of time. And I don't know how much time we have. Do we have a few more years? Maybe not. We won't know until after the fact. Then we'll know.